Taking back America, one consumer at a time. It's the Krieger Files.
All right, here we are back from the news break, talking with Fred Dashevsky. Welcome back, uscoincapital.com.
Hey, good morning, Dave.
Well, so we talk about the economy on the show because it's about all things legal, financial, economic, and of course, consumer-related issues. And of course, you know, that's why we have Fred on, because Fred is very well versed in economics, having studied this stuff religiously. And, of course, today I'm wearing my T-shirt that says, never underestimate the power of stupid people in large groups. And there's a picture of the Capitol on my T-shirt.
Nice.
Anyway, I got that from libertariancountry.com. Anyway, those are people who are wanting to know, where do you get that T-shirt from? No, we have, in fact, I might even make a deal with those folks. But here's the deal with uscoincapital.com. It's one of the reasons I have Fred on, because it's more than just sitting there pimping gold and silver. Fred is not only a member of the American Numismatic Association, he also can grade coins. He's one of those master elite guys that knows how to do this. And so Fred is with uscoincapital.com. That's where you go. It's 1-800-878-2646 is the phone number. And now that I've done that shameless plug, Fred, I want to get into the folks. These guys are great to deal with. I buy my silver only from Fred. I used to buy it from some other place until I met Fred, and it's like, look, this guy knows more than these Hanyaks up there where I was buying my silver from. There's an article out.
You can't see it, but I'm blushing.
I understand. Well, I'll see it next time when we come on, because then we'll be on video and people can watch us in live stream. There is an article out, Zero Hedge is reporting why silver could dominate this year. Its potential is undeniable. It could be the year it truly shines. And they're actually promoting silver being an expanding role in electronics and jewelry and fashion trends, in the space industry. The supply is under pressure. I mean, that was kind of scary. Mining output is struggling to keep up with the demand. What do you know?
You know, that has actually been the case for a couple of years. We've been running parity, barely able to manufacture and mine enough silver each, let's call it month, for the current needs. And the industrial demand is really picking up pace considerably more than I think a lot of people anticipated. The use for silver in electronics is huge. And the more that we expand, those types of things as products within our economy, the more the demand for silver grows. And, this industrial demand side is just a part of the equation. But there are, I hate making predictions. It's never been my favorite thing to do. I think last year we talked about, the idea we would probably see silver go up $28, $29. Well, it ended up about $30. Now we're looking at almost $32 silver today. Gold did remarkably well also last year. And even this year already is starting off with a pretty strong run. We're around the $2,800 mark from around $2,600. And I think, for lack of wanting to do it, I think we're going to see $3,200 gold this year, and I think silver will cross $40 and stay there. I mean, we've seen silver cross $40 a couple of times in history, normally on a short-term spike. It didn't last very long, but like we have this $32 mark now, I think the standard is going to turn into that $40 range by this year's end, and I think it would be a great advantage for people to own physical silver. Not only as I always promote it from let's call it a balancing of, the devaluation of paper money, but also it's going to turn out to be quite profitable.
Now, I know that a lot of people out there, like, Tyler Durden at Zero Hedge has his own silver coin as 1 troy ounce, 0.999. Have you seen all this? Everybody's trying to jump on the bandwagon, and, they got the tearaway silver pieces. It looks like, a Hershey bar where you sit there and you break off a chunk, and it's all subdivided so you can give people is all this stuff. I mean, this is not really the numismatic stuff that you're talking about.
No, I mean, there's basically two forms of silver. There are things that are minted by the government that are made of silver, that are legal money, and they just happen to have been made of silver. And then there are the metal itself, which can be formed into anything you want. I mean, you could put your picture on an ounce of silver, have some artist do that design and make yourself a die and, knock out a few, million coins, whatever you want to do. The question is, of course, value. So any of these manufactured things that people come up with and put, even if it's Donald Trump's face on it, if it's your face or my face, it does not add any value. So all you have there is just the metal content. So what you're dealing there basically is bullion in a variety of forms. And it may create interest, which is a good sign. I mean, the fact that people are curious about these sort of things sort of goes to the idea that there's a lot of interest in owning silver. The silver I like, though, are the silver that were minted by the U.S. government. And they were minted as money for the United States because, unlike just making a silver coin with somebody's image on it, we actually, as a country, manufactured silver coins to be used as currency. And I prefer those because the silver in them is the same silver in anything else, but these are also legal currency coins of America, and they cannot be remanufactured. In other words, if the demand increases for a 1963 silver quarter, they can't go back and make more of them to meet this additional demand. So whatever supply of minted coins by the U.S. government that currently is floating around in the world, well, that's it for every future generation of Americans to come. So I kind of like that form because, they can increase in value not only as the metal in them goes up, but also as scarcity becomes a part of their value. And right now, and I know we've talked about this, the difference between a coin minted by the U.S. government and something made today by, some Yahoo who puts his face on it, the premium differences are almost identical. So in other words, you don't have to pay any more to buy an old silver $50 or a quarter or a dime than you would to buy one of these new manufactured silver bars that they can make as many of as they want, and every one of them is identical to every other one. So that's the reason I like the coins. Plus, I don't know, just as an American and as a constitutionalist, I really believe Americans should own United States money, real money, not paper, not notes, not Federal Reserve issues, but actual money of America should be in the hands of every American.
Should be. And the thing I'm looking at too, Fred, is this idea about BRICS and its competition with the U.S. dollar. I mean, they're still pushing against the dollar, even though now Trump is back in the saddle. And I'm not sure exactly, how this is going to play out. But with the tariffs, I mean, if he's going to start imposing tariffs, that may well affect BRICS. But it's also going to drive more people. If they're going to impose tariffs like that, 25 to 50% tariffs, that's going to force more manufacturing startups in the United States, right? And more jobs.
Well, it's an interesting problem. So, tariffs, first of all, you have to remember that Congress has the authority to raise taxes and regulate those. So the idea that the president even has this authority to deal with tariffs, it comes in a lot of ways from a 1934 Depression period signature from Franklin Roosevelt, who signed the Reciprocal Trade Agreement Act and enabled the presidents to negotiate trade agreements and apply tariffs. So generally speaking, it was an attempt to avoid, massive swings to do for political reasons. So, Congress signs this agreement in 1947 that allows for the Tariff and Trade Act, and we move on to the 1970s where the section of the Trade Act authorized the president to impose tariffs, on countries that violate agreements or burden U.S. commerce. This was the wording. So this is what enabled Trump to jump into the whole, tariff concept. And, he had signed so far 27 executive orders in his first couple of weeks. I mean, talk about coming out of the gate, quick. So the tariff situation is interesting. You could argue that it could raise prices on goods and services. You could argue it could slow down the gap between our trade problems where we import, let's say from China, way more than we sell to them. I think most Americans know that. We are China's biggest consumer. We are their biggest customers. They make all this, the cheap Barbies and the cheap crap, and they import it to us and we buy it. So we sell them stuff, but they put tariffs on it. So we try to sell steel into China. We have to pay a tariff on their end. So that means that buying it in China is going to cost more if they want to buy an American good. So we're trying to play the same game in reverse. Whether that will really have an impact economically, it's going to create volatility, and it creates a lot of conversation. It also could be inflationary. I mean, there's arguments both ways. But we're certainly coming out of the gate here with the Trump administration. I mean, they're on fire. 27 executive orders in what, 10 days?
But that all has to deal with the economy here. It doesn't. I mean, he actually repealed or reversed some of Biden's executive orders. With one of these executive orders, there were like 78 of Biden's executive orders that were reversed just in one executive order signing. So I mean, there have been so much going on right now that, you know, we're all watching eagerly, because Trump is talking about getting rid of the IRS completely and doing away with federal income tax and relying solely on tariffs the way things used to be constitutionally. Folks, we'll talk about that. And Fred's got a special to talk about, too, at uscoincapital.com when we come back from the break. Stay with us.
Molesting your earballs one more time. It's the Krieger Files with your host, Dave Krieger.
All right, we're back, and we're molesting your earballs in a good way because Fred Dashevsky is here, and uscoincapital.com is offering you a perk for all of you show listeners here on the Krieger Files. Fred, what say you? What's the deal?
Well, I bought a group of $5 gold coins early last week, trying to take advantage of there was a dip that day in the price of gold, so I did capture these. So the $5 Liberty Head gold coins, which were minted from the 1860s up to 1906 and 1907, after which the design was changed to Indian heads. These are the Liberty Head $5 gold coins. So again, they're going to predate 1907. They're all mint state 64. I mean, these are incredibly high quality coins. They would normally retail in the $1,300, $1,250 range, and I could offer these for your listening audience at $1,125. And I am throwing in a Morgan silver dollar, at least 100 years old, because they ended in 1921. These will all be before 21, and they go back to as early as the 1870s. The silver dollar itself is also a mint state 64, and the two are coming together. No extra charge for the silver dollar for anybody who mentions your show today. So this is only for your listeners. I will include not only the $5 gold coin for the $1,125, I will throw in free a $125 value Morgan silver dollar, 100-year-old, mint condition, MS-64 graded Morgan. So that's my deal of the day.
Deal of the day. That's right. Let's make a deal. That's right. 1-800-878-2646. Notice how that number just rolls off my tongue. I don't even have it on my board here in the studio. I mean, I just know this because I deal with Fred. Fred's a good people. All of his people are good people. So uscoincapital.com. If you have questions about any of this stuff, you call them and or go to uscoincapital.com, send them an email with your number. They'll call you if you don't have time to deal with it. But, hey, this is a great deal right now, the $5 Liberty Head gold. And now where do you see, because gold did dip, where do you see gold headed in the future?
Well, right now it's about 2,800, so it's reversed the dip and started to climb again. Unusually, on the back of the U.S. dollar, also going up. Normally those two go in reverse directions of one another. But we're getting not only a rise in the U.S. dollar's value across the other foreign currencies, but we're also seeing gold go up. December had breaking record accumulations by central banks, and this is what's driving the price of gold higher, it is accumulation by central banks all over the world. And I've been following this for decades. Interestingly, most of the time, central banks, when they experience economic, let's say, uncertainty, they try to find another country's currency to park their capital in temporarily so that they can avoid losses, and then when things settle out, move back. The problem is every currency worldwide is inflating itself by adding more and more into its reserve capital, so they're making more and more paper money all over the world. So every currency is being inflated, and by default, nothing left that remains valuable except gold and silver. So the central banks, instead of moving from one currency to another, they're buying gold. And I believe we're going to look at, as I mentioned, probably a market price of around, I'm going to say $3,200 for gold at some point this year. And I think, again, silver, $42 to $45 at some point, where it sits now at $32. And gold is at $2,800. currently.
So I'm looking at the fact that we got all these people out there that still are putting their faith in the stock market. And I mean, even UPS, if you were investing in UPS, their stock just took a nosedive because of the fact that they decided that they were going to have, and I'm talking about cutting by 50% deliveries for Amazon by the end of 2026, and it sent their stock tanking. So, when you look at stuff like this, if you are dealing in underperforming stocks, I think it's a good time to get out and invest in gold because, I mean, literally, you got something that's not going anywhere. You got a gold coin that is solidly in your possession that you know is going to have value. And if it goes up to 3,200 and you're buying it at 2,800 or 2,600, I mean, that's a hell of a gain. I mean, that's better because, one, you don't have to worry about the stock market and the volatility of the market. People need to stop putting their faith in the stock market and start putting it in themselves. And the only way they could do that is to cash out the underperforming stocks and bonds because all those guys, I hate to belittle Edward Jones, but these guys are all told to put your people in bonds because they're safer. Right. And I'm like, I don't know. When you get all this competition, what's the downside of that, Fred?
Well, the downside is that in the end, you're still relying on the value of the dollar. So the thought of the bond market as a supplement to stocks is that the idea is the stocks can be much more volatile where bond yields are fixed and you know what you're going to get and they're guaranteed by the U.S. government. So the idea of them defaulting becomes less likely and it becomes more of a safe haven. You have to then accept the notion that, let's say the safer an investment is, the less yield it returns, which is why you could park money in a bank and you don't have to worry about volatility. You're going to get your 2.5% or 3%, whatever, or 4% that they're paying, but it's locked. It's not going to change. Now, if you buy a stock in a company like UPS or any of the other companies out there, and the value of that stock, it could drop 20%, 30%. There's nothing to prevent that. They're not locked. They're not guaranteed. There's nothing that says they have to go up in price. So you have to then really get to know the market. And, if you're Warren Buffett, okay. He does his research. He looks at his companies. He goes and visits the manufacturers. He sees the floor. He talks to the people. And he comes to a conclusion that this company is worth investing my money long term because I think they'll do well. Most people don't invest that way. They follow the trends or they take the advice of the Edward Jones or whoever it is that's providing their stock portfolios. And again, I don't think there's anything wrong with owning some stocks. But I do believe it makes sense to diversify and own something that's real and physical and tangible. And it's not going to, you wake up tomorrow and suddenly find its value has dropped by 50% because of a bad earnings quarter or some bad report like UPS has come out with. That will not happen with gold or silver. So it's a stable, real, solid thing. And like you said, it's physical. You own it. It's in your possession. And I don't believe that believing in the U.S. dollar is a smart way long-term to invest when the government is running deficits that are so massive right now. We're starting this year, 2025, with over $36 trillion in national debt, and we're adding $1 trillion to it every 100 days. So if we're going to sustain this game, we're going to have to print an awful lot of money to make payments on the interest payments on the debt we're carrying, because there's no way for the government to raise that capital through taxes or reduction of government spending, no matter what Trump wants to do. It's just not big enough to do any kind of damage to the overall size of the problem. So the net result is we're going to print money. That's going to weaken the value of the dollar, and that means that bond that you hold or those stocks that you hold, they're buying less in real terms because the paper they're based against is changing in value. That's why I like diversifying with physical gold and silver, and I think it makes perfect sense for Americans to carry at least some of their wealth in something that's less subject to whatever might happen this year. I mean, look at all the exogenous events that happened in 2024. We never saw it coming. I can't wait to see what happens this year.
Well, and see, the thing is Adam data came out with the fourth quarter 2024 U.S. home equity and underwater report showing that 47.7% of mortgage residential properties in the U.S. were considered equity rich in the fourth quarter of last year. That level was down slightly from 48.3%. So even the dollar that affects the housing market as well. And I don't know if people really understand why they should be, and I don't like to use the word hoarding. Let's use the word acquiring gold and silver. And like I said, I'm not a big gold aficionado, but silver, man, I'm all over that. I really think that that's going to take off, and that's something that you don't have to play in Wall Street, because Wall Street, if Warren Buffett's playing in Wall Street, what does that tell you? It's a rich man's game. And so if you've got lots of money to burn, and you can light a match to a $100 bill, and you don't care if that $100 bill burns up, I mean, you have to look at what the market is doing and bust out those loss leaders, cash in your chips, and start investing in gold and silver. But when you're looking at real estate, on the other hand, a lot of us are real estate rich and cash poor, and the worse the value of the dollar gets, I mean, what's going to happen to our equity then?
Yep, and interest rates will have to climb. So Trump has made, let's call it promises, 5 major promises as president. He wants to lower inflation. He wants to make gas cheaper. He wants to institute some tax cuts. He wants to avoid cuts in Social Security. And he also wants to bring down the cost of imported goods. The problem is reducing taxes, tax cuts, are really economically stimulating, but are very inflationary. So they're really going to also raise the deficit. So I'm afraid that the path that he's going to choose to kickstart the economy is going to cost us a lot of money in the end that people are not really prepared for. I mean, costs are absolutely exploding, just in relative terms. You want to go back and look at, the year 2000, a large fry at McDonald's was still 39 cents. A big meal was $2.99. You could buy eggs for $1.10. I mean, the prices of things relatively over time are changing so rapidly. And if we institute an awful lot of new policies that are short-term minded, Americans just need to be prepared for the net result, what that will do to the value of that dollar. So I
there you have
the
it.
dollar will get weaker and gold and silver prices will go higher.
That's why you need to call Fred at uscoincapital.com. Fred Dashevsky, thank you so much for being on the show and enlightening us. See, this is the economic news I'm talking about, folks. Tune in to the KriegerFiles.com next week.